Hello everybody, this is Rudra Pradhan here. Welcome to Business Analytics for Management Decisions, and we are here in unit 2 and that to third lecture on exploring data and analytics on spreadsheets. In the last two lectures we have already highlighted the details about the data structure, the data view in Excel sheet, and then various operations related to Excel functions. So, what we have already actually concluded that Excel has a beautiful kind of softwares or kind of structure through which data can be data can be investigated or it can be analyzed in a much better way. So, that means technically what I can say, Excel itself will give you some kind of insights, and that will be very useful for business analytics. So, even if you without having advanced kind of use of analytics techniques or tools, still you will get some kind of insights through Excel functions, and that insights will help you lot to take some kind of management decisions. So, here we are in the process of knowing more about this particular Excel functions, and I will give you some of the examples where again Excel has a kind of beauty. So, let us see here, and we are here in the second component, and then with the third kind of requirement examples with the Excel functions. Of course, we have discussed couple of examples already, but still we will just highlight once again as per your particular requirement. So, in this particular lectures we are supposed to again to know something more about the understanding of data and Excel use, and then I will just connect with some of the examples, some of the financial examples like break-even analysis, income statement analysis, and loan repayment kind of structures. And again Excel has a beautiful kind of environment or the kind of spreadsheet where all these things can be very easily can be evaluated and analyzed. So, that is how it can be also called as one of the analytics mode or medium through which you can get some kind of insights, and that insight will help you lot to take some kind of management decisions. So, let me give you some kind of exposure here, and the first example which I like to connect with Excel sheet is called as a break-even analysis. In the break-even in any kind of business process, and profit is the kind of prime goals. There is a guy who Peter Drucker, who mentioned that profit is meant for three things. It is the kind of premium of cost of productions, and it is the benchmark of particular organization, and then it is a component through which actually a company can plan for or make a investment strategy. So, there are three most important requirements through which actually a business is always evaluated, and that is how profit is the key component in any kind of business. And business analytics, that is how very keen on to analyze all these things, so that profit can be always there in the systems. So, we are doing all these things kind of analytics or the use of analytics for business problems, and in order to have more profit and to make the business in a positive sides, and the profit is the actually difference between the revenue and cost, which we have already highlighted many instances. And again I will give you here more in depth kind of understanding, where you can actually again use Excel sheet through which you can take a management decision. For instance, let us say there are three different firms, and you have actually price and cost informations over the time, and you are interested to know which firm is in which shape, whether it is in a profit shape or loss shape, or in a kind of balance positions, and that too in which period, and with respect to kind of comparisons. So, if these are the kind of environment and problems, so the Excel sheet can again further help you lot to solve the problems. So, you just calculate for a particular company, and then that can be just apply for other companies, then automatically everything can be systematically reported. So, that is how the beauty of the Excel sheet is all about. So, now let me give you some kind of snapshot about the break-even analysis. So, break-even is a kind of situation where your revenue exactly equal to cost, and if not, then revenue may be greater than to cost, or revenue may be less than to cost. If revenue is greater than to cost, so then business is at profit level. So, that is called as actually supernormal profit, and if not, then there is a chance of revenue equal to cost. So, that is what we call as a normal profit, and the other name of normal profit is called as a break-even analysis. And then if not, then revenue less than to cost, that is what actually called as loss situations. So, every business there the analysis or the requirement is just to see the kind of status of a business. So, that is with respect to revenue versus cost, whether the particular firm or particular business is operating in a loss shape, or it is in a profit shape, or it is in a break even kind of point. Because break even is a kind of pivot or key kind of situation, or kind of stage where you have to take a very kind of crucial decisions, and that is how you are very keen to know this kind of examples, and then we like to know how Excel can help us to solve such kind of problems, and to get some kind of managerial decisions. So, now these are all here to highlight, and here to in the break even analysis we are supposed to know the kind of number of units quantity to be produced at a kind of break even situations. Then it is the kind of situation where total revenue exactly equal to total cost, and as a result your declaration is profit at break even point is nothing but called as 0. That is how it's the other name of particular situation is called as a no profit and no loss situations. So, now I will here give you some kind of details about this break even analysis. So, the requirement is like this, that your you are supposed to know cost, and that cost is usually divided into two parts, that fixed cost and variable cost, and this is actually fixed cost and this is variable cost. This sum of fixed cost and variable cost will give you the total cost, and then you have actually profit. Profit is the difference between total revenue and total cost, and total revenue is nothing but actually price into sales, that is the quantity, and then once you get the sales revenue. So, the sales revenue need to be compared with fixed cost and variable cost, that is what is called as total cost. So, then we will see the kind of signal, and we are actually keen to know what is the break even quantity. So, that is very important in any kind of business process. So, we are here to know how Excel can help us to decide this particular point, and that can be for generalized for other company when we have a big spreadsheet kind of environment, right. Okay. So, now so accordingly we can proceed. So, profit is actually total revenue minus total cost, and profit is again divided into revenue and minus fixed cost and variable cost. That is actually the difference between that means these two gives the kind of composition total cost, and revenue is nothing but actually sales price and the quantity to be quantities to be sold, and then it will give you the component called as a sales revenue. Then variable cost actually is nothing but depends upon quantity. So, that is why variable cost multiplied by quantity, that is VQ, and then fixed cost actually independent of quantity. So, technically let me give you actually structure like this. So, this is actually let us say in the break even situation it is total revenue exact equal to total cost. So, that means total revenue actually this is a P into Q, that is nothing but called as a total revenue, and then equal to total cost, that is the total fixed cost plus total variable cost. So, total variable cost is nothing but actually q into let us say v. So, I will put component like this, q into v, total variable cost. So, then your equation will be like this. So, let me give you a kind of composition here. So, now here p into q minus q into v equal to TFC. So, this is actually, if you simplify then it will give you the structure like this. Okay. Okay. So, now this is actually TFC, this is actually TFC, right, TFC. Then if you take q commons, then this is p minus v and then equal to TFC. Then finally, q is nothing but actually equal to TFC divided by p minus v. So, this is actually called as break-even quantity. This is actually called as a break-even quantity, and by default one of the standard actually business decision or business understanding is that p should be in any context should be greater than to v. That is actually for a unit quantity, particular unit quantity, your price should be greater than to variable cost. Okay. So, for a particular unit, so the price composition should be greater than to variable cost. If not p greater than to v, then the mathematically this particular requirement is actually useless. So, that means technically in any kind of business process, the theoretical requirement is that quantity should be positive and price should be positive, and here the signal is that it is mathematically also true, and also it also supports the theory and the kind of business logic. So, as a result, you have to be very careful how you have to deal with all these kind of situations. Okay. So, then okay. So, this is how the clear cut understanding. So, let me give you some kind of structure here again. So, this is how the whole compositions, what So, the break even quantity is actually fixed cost divided by price into variable cost, that is a particular unit. So, then accordingly, so we can actually analyze through Excel sheet, and in the Excel sheet you just enter this data, and then by default some kind of using Excel functions you are in a position to calculate the exact requirement. So, so that means actually, so once your entry data are readily available, then there is no need of actually calculate step by step, just put a functional form, then give the kind of exact requirement, then by default Excel will help you to report the particular requirement. So, then on the basis of this requirement you can take a management decision. The way which you have already solved some of the problems in the last lecture, this is also similar kind of situation, just you report all these things in the Excel sheet, then you put equal to signs and exactly connect with as per the particular formula. Then once you put the enters, then automatically the particular the value will come, and that value will give you some kind of insight as per your particular requirement. In fact, so this is actually graphical structure of kind of break-even analysis. In fact, actually Excel has a two different kind of modes. In one mode you can get directly quantitative informations, and the same information can be also graphically plotted, and then you can get some kind of better insights or better clarity. So, this is one of the examples, and that can be also solved through Excel sheet. I will show you in the later stage, but in the meantime let me clarify how it is actually happening in the kind of situation. See here. So, actually total revenue starts from here only. So, this is actually this is what actually the requirement here. So, the 45-degree angle is nothing but actually total revenue curve, and this starts with 0, because when actually a quantity equal to 0, then the revenue is also equal to 0, but cost cannot be actually 0, because and there is a fixed cost component which is always above than 0. So, as a result, so this is the composition of fixed cost, and then variable cost will start from onwards, and the variable cost and the fixed cost will give you the total cost picture. So, this amount is nothing but called as a variable cost. So, now this is a total revenue pictures, then you have a total cost picture, then the intersection point will give you the understanding about the break even situation, and the break even left side will give you the a structure 1, and the right side will give you the structure 2. So, this is actually profit side and this is the loss side. So, that means this is actually called as key stage or key component or pivot kind of situation through which the particular situation is a different game altogether. So, that means in one side negative and in another side kind of positive. So, we like to know the break even requirement is just to know at what quantity levels. So, the particular business will return from loss to profit or profit to loss. So, that means if you moving from right to left or left to right. So, you like to know, so what is the point quantity through which business or management is changing one angle to another angle, and that is how the break even is all about. And this can be mathematically calculated, and again with the help of Excel sheet you can also solve this particular business problems, right. Okay. Okay, so this is another kind of examples. In fact, I told you earlier that business is a kind of complex kind of situations, and we have lots of dynamics, and with the help of dynamics you can you can have a change kind of situation. The cited example is here. So, we have a fixed cost and total cost, and this is actually initial total revenue. Then again when price will change, increase price or decrease price, your revenue curve will also change. So, now the break even point will be different. So, that means this is a typical example what we call actually sensitivity analysis. So, keeping other things remain constant, if price will change here, then the break even situation will change, and here we are allowing increase price situation, then we are checking what is the break even position. So, now initially the initial this is actually all revenue, and this is what the break even point. Now, with the increase of price, then your quantity structure is actually reducing. So, this is actually as per the business kind of the demand theory we have already highlighted. If you increase the price, then quantity will be little bit lower. So, this is what happening here, and so that need to be tested again mathematically, and that too through Excel function it can be also easily in a position to help and solve the kind of requirement. Okay, so, let us go to another kind of situation here, and this is another kind of situation, another sensitive kind of situation here. Keeping revenue constant, if you like to reduce the cost or increase the cost, then the break even situation will increase. So, that means actually in any kind of business process, to retain profit or to decide profit or decide break even. So, you can apply cost strategy or you can apply actually revenue strategy. So, increasing revenue or reducing cost will allow you to go to at a profit level. So, that is how we are keen to know how it is happening and how Excel can help you to analyze all these situations. So, means typically actually the beauty of the Excel sheet, when you have a kind of sensitive kind of situation, sensitive analysis, that means when there is a change of various price, then change of various cost, then how it actually a firm is behaving over the time or over the all the changes. So, manually it is very difficult to do all these things, but once enter the data and give commands to the Excels and put a particular functional form, or that means to indicate a particular functional form. So, automatically, so Excel will give you some kind of judgment or insights. That insight will help you to take some kind of management decisions. So, this is another kind of situation. So, changing the kind of cost and revenue structure, the situation is changing one point to another point. So, now go to the Excel sheet again, and this is the Excel view, and here the break-even analysis. Then same things, fixed cost structure is there, variable cost structure is there, and price is like this, and you like to check actually whether what is the operation of variable or break-even quantity. So we have already calculated how what the formula is written here actually. So this is what actually, so this is what actually the operation of formula, and exactly that is the fixed cost divided by actually price minus variable cost. So the price actually the price component is here and variable cost component is here, and this is actually fixed cost. That means technically, so the operation is D force, that is actually 10,000, and then divided by price minus variable cost. Price is actually, this is actually D 8, and then minus D 6. D 6 is nothing but called as actually variable cost. So now the once you actually put the enter, then obviously it will give you the signal about the break even quantity. So that means actually, so this is again beauty of the Excel sheet. Once you have actually information, then Excel function will help you lot to take a decision. So that means it will give you some kind of insights, and once you get this insight, then this will help you lot to solve the business problem, and you can take a management decision. Okay. So similarly, this is actually break-even analysis in the spreadsheet. So I am not going in details again. So this is a little bit complex kind of environment, which I have already highlighted that in the Excel. So you can have a quantitative information, quantitative judgment. You have a quantitative judgment here, and then the same judgment you can graphically actually plot and get to know what is the kind of strategy and signal. Then with the help of once the plotting will be different when you will change the price structure and cost structure. So this will be a different kind of environment altogether. So that means technically what I again interested to highlight that so break-even has a means Excel has a kind of beauty that it helps lots of business related problems with the operation of Excel functions. So similarly, some of the other situations you can also apply Excel functions and then take some kind of management decisions. Okay. So this is again actually the spreadsheet, and the spreadsheet will give you some kind of judgment how the break-even units all together. So this is actually details about the structure of total revenue and total cost, and then finally will give you a snapshot about the kind of requirement. Okay. So this is again Excel view of graphical plotting, and we will have a detailed discussion on graphical plotting in the next lecture. So in the meantime, we will see what are the other scenarios through which actually Excel function can help you lot to take some kind of management decision. This is again standard examples of break-even analysis. So I am not going in details. This is similar kind of situation. Fixed cost, variable cost, then get the total cost, then connect with the price and quantity, get the total revenue, then accordingly you can find out what is the quantity through which we can say that it is a break-even kind of situations. So there are many other areas where the Excel spreadsheet can be frequently used. In spreadsheet engineering is the process of developing good, useful, and correct spreadsheet models. And spreadsheet models characterizes the relationship between inputs and outputs, and it is very important to note that the to use input data in the model formula, but not to instead reference the spreadsheet cells that contain the data. So that means actually means the whole idea exactly like this, you must have actually the kind of proper informations, and that should be actually in a structured format. Then with the help of Excel functions, you are in a position to calculate and then get some kind of insights, and on the basis of these insights you can take some kind of management decisions. Here is another kind of situation where actually the Excel sheet can help you lot to get some kind of management decisions. So this is again actually the outsourcing kind of decisions, where actually we are interested to know what is the cost difference kind of a cost difference in a particular industry when you actually move one situation to another situation. This is similar kind of environment. So we are interested to know how cost is effective from one situation to another situations, and cost difference is there, and you have to take a decision with if signals. By putting actually if signals, then you will find actually a management decision. So I am not going in details. It is a like break-even analysis. The similar structure can be applied here, and then to analyze the particular situations. Okay. So this is how the pricing decision spreadsheet models. Then here also similar kind of situation, you like with the availability of price, and you are supposed to report revenue, and then you are in a position to, or you are in a position to find out whether you have to go with this particular model or you have to reject this particular model. So these are means what I am I am interested to say that so this is actually, this spreadsheet has a beauty that if you have some kind of proper inputs, then you have the objective kind of requirement. Then with the help of Excel functions, you are easily in a position to find out insights and get some kind of results, and with the basis of these insights and results, you are in a position to make a judgment, okay, whether to accept or whether to reject. These are the kind of requirements which you need, and that too Excel will help you lot to solve this kind of situation. So these are all details more about something like spreadsheet modeling and engineering. So means it's a kind of use, reuse, structure, restructure, through which the actual requirement till we get some kind of final decision. Excel has a kind of beauty that with the help of sensitivity analysis and for kind of various Excel functions, you are in a position to take some kind of decisions, right. So this is another kind of examples, financial examples. Here the idea is to declare whether what is the actually income of a particular company, and this is income statement analysis. We have actually we are living in a corporate kind of environment, and that means since we are discussing about business analytics, so every business business organization has a kind of income statement kind of structures. So our requirement is to take a decision whether the particular business is in a profit shape or loss shape, and how is the net income, how is the operating income, like this. So this is a standard examples, and these are the standard requirement. Starting from the basic understanding is that gross profit, then there are some of the other kind of profits like operating profit, net profit, etc., etc. So the basic idea of financial modeling is that gross profit is the difference between sales revenue minus cost of goods and services, and then operating expenses will be there, like administrative expenses, selling expenses, all these things. Once you deduct, then finally a component will be with you, that's called as net operating income, and that is technically called as actually earning before interest and tax. Then there are tax deduction, interest deductions, tax deductions. Then after deducting tax and interest, then finally there is a component called as net income, and this net income actually is nothing but actually the business kind of total profit, and that is the profit which is actually meant for shareholders kind of requirement. So again, actually every company, big company, the business depends upon shareholders investment. So that's why the net income is one of the important requirement every company or every business one they need to report, and that is how the status of a company can stand. And accordingly software Excel spreadsheet will help you lot to calculate all these details. That means just you report all these items, then finally with the kind of Excel functions or Excel formula, so you are in a position to report actually what is the happening of a particular company and then that can be generalized for if you have a series of companies, and if you have a data in proper structure, you calculate for one company, then just scroll it, then you can in a position to report other companies in the same times, and that is what the beauty of Excel spreadsheet. This is similar kind of examples. So, you can go through all these details. You can this is another examples, and since we have no time, so that's why I am just highlighting that we have already discussed this kind of problems in net present value criteria, and this is another kind of example where if you have actually investment, then cash flows, and then what should be the present value of a investment. So, that means for examples, we want to invest some amount, and you like to actually know how much actually invest every month when you are in a when you need actually a big amount at a particular period of time, and the present value criteria will help you a lot to get this kind of decision, and we have Excel functions, and Excel function will help you a lot to take a decisions with a particular structure and understanding. Just report all these figures, and it will give you the snapshot that what is the kind of a particular requirement you are supposed to invest, so that the total amount you will reach at a particular years. So, this is how the Excel spreadsheet all about, and similarly investment rate of return can be calculated by this help of Excel formula. And the last but not the least final example is it is very useful for kind of loan repayment systems. It is useful for loan repayment systems. So, where you like to know actually what is the actually the minimum in constant amount you are supposed to pay, and if your loan amount is fixed and time period is fixed. So, you are supposed to know what is the minimum down payment, and then what is the maximum period of constant payment towards this particular loan repayment system. So, here Excel will help you a lot to calculate this kind of requirement. So, this is what the mathematics is all about, and again through Excel spreadsheet it will help you a lot or what I can say that Excel sheet spreadsheet will give you very quick decisions, because it is well connected with all these financial functionality. So, as a result you can take easy decisions. So, this is how the typical process. Usually actually Excel will help you to know what is the actually the monthly installment, constant installment you are supposed to pay within this loan amount, and that too for a 3 years time period, and that too a particular interest rate is given. So, this is actually the beauty of this particular such kind of this is another kind of an example. So, I am not going in details. Okay. So, so these are the things we have supposed we have actually discussed in this particular lecture. So, some of the classic actually management problems, and that too can be solved through Excel functions, and we have discussed break-even analysis, cash flow analysis, and then the kind of investment decision, income statement analysis, and the loan repayment systems. So, these are actually typical areas where Excel functions usually help a lot to solve some of the management decisions. So, with this we will stop here, and thank you very much. Have a nice time.